In continuation to our previous video where we are talking about the new TDS sections announced in Finance Bill 2020-22 and applicable from the coming month on 1st July 2020-22. We already discussed about the section 194R TDS on perquisites. Now in this video I am going to discuss another section 194S TDS on purchase consideration of virtual digital assets. According to Union Budget for 2020-22 and 2020-23, Government has introduced new provisions on VDA, which means virtual digital assets are now taxable in India. Further, recently a new notification is released for filing PAN-based return in Form 26QE and issue Form 16 under Section 194A. Hello everyone, I am Saloni from Webtel. As many people in India are now trending a new investment in bitcoins, NFTs and other cryptocurrencies. It is popular day by day and now the government has also wanted to track this type of transaction and tax the same. Before starting this video, I would like to request you to subscribe to our YouTube channel Webtel Electrosoft to get regular compliance updates. Let's start with the understanding of the section 194S. For this, I am taking you to my desktop screen to discuss the taxability of this section. Section 194S Purchase consideration of virtual digital assets and a new Form 26QE will be used for the filing of the return. Firstly, we have to understand what is the meaning of virtual digital asset. A virtual digital asset means any information or code or number or token not being Indian currency or any foreign currency generated through cryptographic. For example, cryptocurrencies like Bitcoin providing a digital representation of value that is exchanged with or without consideration. Further, with the promise or representation of having inherent value or functions as a store of value or a unit, which means it can be used as another mode of payment. In this scenario, the government has also proposed to introduce digital rupee using blockchain and other technologies to be issued by Reserve Bank of India from the financial year 2020-22 to 2020-23. It is not limited to investment scheme and it can be transferred, stored or traded electronically. By using this, we can trade online and earn as much as money as possible. Non-fungible tokens and any other token of similar nature are also included in the definition. So virtual assets have digital existence and plays important role in the economy. To trace the transactions of VDAs and cryptocurrency, the government introduced a new provision of deducting TDS in case of the transfer of a VDA. And for this, a new section 194S has been introduced in our Income Tax Act for the deduction of TDS on the transfer of virtual digital assets. TDS is to be deducted on the payment of consideration and the amount of payment or credit will be the payment of consideration, and this means the gross amount of consideration paid to the resident person for the transfer of virtual digital assets, and this provision will be applicable from 1st July 2020-22. So now let's talk about the TDS related details under section 194S. As according to the section 194S, TDS would be deducted at the rate of 1%. But there are many more sections applicable in the specific scenario, and these are in the case of non-PAN. If the PAN is not available, then the TDS will be deducted at the rate of 20% as per the section 206AA. Further, if as per the section 206AB, which is related to the non-filing of ITR, a higher TDS would be deducted as per the formula. and it would be applicable on all assessees but not applicable on the specified person. Second, required to obtain a TAN number as per the section 203A, and a TAN number will be used for the filing of TDS returns under section 194S, and this would not be applicable on the specified persons. As we can see some specific conditions for a specified person, let's understand who is a specified person for this section. Basically, as per the section 194S, specified person includes any individual or HUF having the turnover from the business up to rupees 1 crore and having the turnover from the profession up to 50 lakhs, but not having any income under business or profession. Further, if the payer is a specified person, then there is no requirement of obtaining the TAN number to the specified person. They can file their return on their PAN basis. And there are some more exemptions as per the section 194S, which are as follows. If the aggregate value, or you can say the consideration value, is below 10,000 rupees, then no TDS would be deducted as per the section 194S. And if the amount is below rupees 50,000 for the specified person, no TDS would be deducted as per the section 194S. And the point to be noted here is that aggregate value is applicable for the whole year, not from the 1st July 2022. And according to the section, or you can say according to the definition of the payment, sections are covered type of payment like payment in cash or kind or both. But there are some specific provisions for the payment of tax. That is, if cash is not sufficient to meet the liability of deduction of tax, then payer, or you can say the deductor, shall release the payment only if either the deductor has collected the amount equivalent to the TDS amount from the payee, or if the deductor insists the payee to make the payment of TDS on his own. And for the filing of the return as per the section 194S, deductor is liable to file a return as applicable and release the certificate of TDS as on the time. And the return filing of section 194S are as follows. If the TAN number is available, then they need to file a form 26Q and tax to be deposited under Challan 280, and a certificate of tax deduction to be issued to the parties of form 16A. Now, TAN is not mandatory for the specified person. So, as per the discussion in our previous slides, that specified persons are eligible for specific benefits, like TAN is not mandatory for the filing of return by a specified person. And the specified person doesn't require to apply or obtain a TAN number for deducting the tax under section 194S. A specified person can use his PAN in the place of TAN. And on the 22nd June 2022, the CBDT, which is Central Board of Direct Taxes, has notified the Income Tax Rules 2020-22 related to the deduction and payment of TDS, and issuance of TDS certificate under section 194S has been notified by notification number 67 2020-22. And as per the notification, now specified persons are applicable to file the return are as follows. They need to file a PAN based return for the specified person, and the form which they need to file is form 26QE, and a challan cum return would be filed under form 26QE. And after the filing of the challan cum statement, they need to furnish a certificate within 15 days from the due date of furnishing their challan cum return. In the screen, I am sharing with you the first look of the return of Form 26QE in detail. It is a challan cum return, which means no need to deposit challan separately. Basic information related to the PAN is required to be filled, like the financial year, PAN number of the deductee, name of the deductee, address, mobile number, email ID. Star marked are the mandatory fields in this form. And here you need to show the transactions related to VDA, like date of transfer, but a new option is highlighted that whether a payment is made in kind or in exchange of another VDA. Further, instead of Form 16A for TDS certificate issued to other than employees, a new Form 16E is to be issued by department for Section 194S. The due date of issuing the certificate is within 15 days from the due date of furnishing the challan cum statement in Form 26QE. I hope by now you have understood Section 194S. Further, PAN-based return Form 26QE and Form 16E will be available shortly from the department. Further, I can give you a view on TAN-based TDS return filing as per the Section 194S. And for this, I am taking you to my desktop screen. So this is our Webby TDS solution through which you will be able to file a TAN-based return under Section 194S. And for the filing of the return, firstly, you need to create a company master, and for the creation of the company master, go to the master tab, then click on company master, then click on new record. Here you need to provide the details related to your deductor, like the display name of your deductor, address detail of your deductor, email ID, mobile number, etc. Then you need to select the organization type from the drop down. Then you need to enter the PAN number, TIN number, GST number of your deductor. Red marks are the mandatory field. Otherwise, you will not be able to save the data if the data has not been provided in these columns. Then you need to fill the details of the responsible person, or you can say the details of the signing authority over here. In case if the address details of your company and responsible person is same, then you can click on same address as company. And after that you will be able to save the details by clicking on save button. As I have already entered the details over here, let me show you. You can enter the details like this and then you can click on save button and your data will be saved successfully. This would be a process of your company master. You don't need to create your company master again and again. This would be a one-time process. Then you need to go to the master tab. Then you need to click on select company for the selection of your created company. And then you can select the financial year in which you want to log in the company. And after the selection, your company name will reflect on the top along with your financial year and your TAN number. And for the filing of your Form 26Q return, you need to go to the master tab, then you need to click on party master, then you need to click on new record. Here you need to enter the name of your party and then you need to enter the PAN number of your party over here. In case if you want to validate the PAN number of your party, then you can validate the PAN number of your party by clicking on validate PAN. Then you need to select the section which is 194S payment on transfer of virtual digital asset. Then you can click on save button and your data will be saved. And after this message, another message will appear to verify whether your person is a specified person as per the section 206 AB or CCA. In case if you want to verify, then you can click on yes, otherwise you can click on no to proceed further. Then you need to go to the tax deduction tab, then go to the other payment to resident and then click on new record. And here you need to select the created party. And after the selection of the created party, here you need to enter the amount on which the TDS has been deducted, the date of payment on which the payment has been made and the date on which tax has been deducted. and as per the rate TDS amount will reflect automatically over here. Then you need to click on save button. And after that you need to save the challan by clicking on tax deposit new record. Here you need to select the section 194S, or you can select the multiple section if you have deposited the challan for the multiple parties. Then you need to select the quarter for which you are going to make the payment, and then you need to click on details button, and the section related parties will reflect over here. Then you need to add the bank details by clicking on add bank, and then you can provide the challan number in the challan number column, and then click on save button, and your challan would be saved successfully over here. And at the end you need to generate a return, and for the generation of your return go to the reports option, then go to the details of form 26Q and select the quarter for the filing of your return. And this would be a process of filing a TAN based return under section 194S. I hope by now you must be clear about the section 194S. If you want to know more about the TDS return filing and our Webby TDS solution, which I just used to prepare returns under section 194S, then visit the link mentioned in the description below and let us know in the comment section if you have any doubts. Give a thumbs up and subscribe to our YouTube channel if you found this video helpful. Next Tuesday we will be coming up with another interesting video to make compliances better for you. Till then, stay safe and stay tuned with us for a better compliance journey.